Hi, welcome back to the Clear Close podcast. We are talking about non-QM loans. What is a non-QM loan? Nikki, could you give us a quick insight or a quick definition of what a non-QM loan is?
Well, a non-QM loan is non-Fannie Freddie, right? When a primary home owner go and buy a house, they usually look at, their W-2 employees and they can show their documents, they can show through pay stubs, W-2s, and that's what the underwriter is going to go off of. And that's basically like a securitized in the market as prime rating A paper loans, right? Full documentation. Fannie has a automated underwriting system to give us a yes or a no, and we work off the conditions on that. Well, non-QM, on the other hand, is private money. Basically, like the guidelines on that is pretty wide open because it's not one person lender's guideline. It's basically whatever that the lender feels comfortable with providing. So we can have a lot more open exceptions and qualifying factors. And with non-QM, basically they look at the qualification up front, and it's more so for people who cannot show their income.
Mm-hmm. Cool. Jason, did you have anything that you want to add about non-QM? Any color?
I mean, I learned non-QM from Nikki, so she's like the queen of non-QM mortgages. And wouldn't you say like the last couple of years, most of our business was non-QM anyway? Like 80% of
Yes,
the loans we did in, I think, 2023, 2024, they were all non-QM,
yes.
hundreds of deals. So yeah,
We literally have gone through like, all the ups and downs, learning from making mistakes on what it is now. Really like we feel so comfortable doing 9QM. It's fun. It's very fun because it's a different type of borrower that we're talking to, really.
Mm-hmm.
So
different type of scenarios too, because it's not just a cookie cutter deal. It's more of problem solving in real time with different levers and tools and lenders you could choose
mhm.
from.
Awesome. What I'd like to do today is go through some really popular YouTube videos, and by popular, I mean I filtered out for the most views. I just searched non-QM on YouTube and see what people have to say about it. And then there's a lot of good content out there, a lot of educational stuff out there. But I wanted us, as the Clear Close, to add our own voice into the mix. So let's go react to some videos. And this is the first clip I wanted to show everyone.
So without further ado, let's talk first about debt service coverage ratio loans. These loans are going to be used by investors. And investors, when they look at an investment, debt service coverage ratio, fancy way of saying, is the rent more than my payment. That's all that is. And so
So debt service coverage ratio, DSCR, is was it a subtype of non-QM loan? Is that right?
It's a type, yeah.
Awesome. And the YouTuber is saying that basically your perspective or your expected rental income from the investment property, as long as it's bigger than your total expenses, basically you're making a profit from this investment, you should be able to qualify for a non-QM. What is your experience based off of the loans that you guys have funded?
Well, with that loan, I mean, it's easy. It's seriously easy. Basically, like how the investors looks at it is that, this is income producing. You're the real estate investor, with that in mind, whatever principal, interest, taxes, and insurance and HOA, the debt out of the property, as long as that is covered by the market rent income, so the appraiser will basically appraise it to see what the average rent is in the area. As long as that covers, there is a loan. Of course, there's like factors of credit as well as the amount of down payment
Hmm.
as well. But literally, that's it. It's there's no need to look at individual income. You could even buy, let's say, if you have enough down payment, you could buy 20 houses all at once. You could buy, you know, uh, 20 properties in contract as long as you have the down payment. Basically, like you could buy it all as long as the rent is covering the debt against the property. So it's a
Interesting.
very, very, that's how people gain up to like 20 houses, 30 houses. How sometimes you wonder how can people qualify to buy that many houses when you show a W-2, it stops you at like one or two. That's it, because you only have enough to show for your primary home. A lot of times you're already capped out by that. How are people buying, rental properties, investment properties, of any size, right? So
Yeah.
this is the type of loan that they use.
You're saying that this is, more tailored towards investor type of people, not for
Hmm.
people who want to buy a home to live in.
Yes.
Correct. You're
And
not allowed to use a DSCR loan
mhm.
for a primary owner occupied property because that's not an investor non-QM loan. It's actually if an investor or lender or wholesale lender finds out you're occupying it as a primary home, they'll immediately decline it because it's,
Ooh.
again, a business purpose loan. So,
So they look at, as a underwriter, right? They look at a primary home as a debt. You got to
Hmm.
make money in order for you to pay your mortgage, right? Okay.
Right.
But for a rental property, an investment property, someone else is making that payment for you. So it's
Hmm.
income producing. So they like that. So with that type of loan, they only go for investment properties. You're an investor. So,
And okay, so I'm gonna fast forward a little bit, and he's gonna talk about a different type or a different subsection of non-QM loans. So I'd like to share this with you guys and have you guys listen to it and get your take on it too.
Okay, bank statement loans. These are super, super simple. You send us 12 months of bank statements. In some programs, they want to see 24 months. You show that you've been self-employed for at least 2 years. And then other programs, other lenders want you to be self-employed for 4 years. We just look at your deposits. January, February, March, April, May. 7,000 this month, 9,200 this month, 11,000 that month, 6,600 that month. We take all that, and let's say it totals 150,000. We can use an expense ratio of 50%. They're just going to assume that you've got expenses of 50%, and 75,000 for the year is going to be your income. Divide that by 12 and it's 6,200 a month or whatever it is. And that's your income. And then you're going to qualify like you would on a regular loan using that 6,200 a month as income. Hopefully that makes sense. If you wanted to get an exception and you're like, I don't have expenses that are 50%, your CPA writes a letter and says, hey, listen, my client is a translator. They don't have expenses. Their only expense is their gas driving to court. And your CPA says, their expenses make up about 10% of what they earn. Okay, we can use that with a CPA letter. So that's it. To see if we can do a loan, a bank statement loan, this is what I have people send me. A copy of.
All right. So bank statement loan, it's from what he's saying, it looks like this is more for someone who wants to live in the house, right?
yes,
Cool.
investment too.
So,
So,
oh, also
yeah,
investment.
mhm.
yeah, you could do bank statement for investment property too.
Ah, okay. So showing the lender your deposits. Who calculates the expense ratio? Does the CPA do it? Do you do it? Does a bank do it? Underwriter?
It'll be the underwriter for the lender or the wholesale lender that the broker like us are going to be shopping your deal for. So every bank, every wholesale lender has different ways of reviewing that income,
Mm-hmm.
and just their guidelines are all different. That's the problem also, because
Mm,
the difficult part about being a broker in the non-QM sector is not just figuring out what the client's needs are, but
mm-hmm.
also finding the right lender to match that consumer or customer. Because just because a bank or wholesale lender offers a non-QM program, it doesn't mean that it's the same from lender A, B, and C. Because they're going to have different overlays, different requirements from the customer and the broker, and it's a hot mess, especially if you don't know what you're doing. And that's the funny part about non-QM, because I saw a huge influx of brokers and other lenders and non-licensed individuals trying to do DSCR loans because the market turned so sideways when the rates started to rise. So there was a lot of unhappy customers trying to do something that's very difficult with people with no experience.
Because you gotta know when to like, get the exception up front as well, because there's certain things that you gotta like foresee before you have the loan go into processing, because one little thing can just cut you short very quickly.
Yeah, and I think that's the really difficult part about, our side of the business is like one little mistake, one little typo, and the whole thing's done, right? Like
Yes.
yeah. Cool. Okay. I have another clip ready, and this guy talks about who else non-QM loan can benefit.
One other final type of non-qualified mortgage that I think is great, if you live in another country and you want to buy a home in the United States, a second home, that is an option. If you're here on a visa and you want to buy a home here and you've been here for 2 years, then that is an option. So that's another way that you can get financing where traditionally you can't. That's all I have for today. I like and follow.
All right. This guy's name's also Jason.
Oh,
Shout out to Jason.
Jasons are awesome.
All right. Jasons are awesome. Jason, you're muted, by the way.
I know. I'm just basking in it right now. I know Jason's are awesome.
So foreign, yeah, people who are outside of or coming in from outside of the country. Does this also work for people not living in the United States? For foreigners?
Yes.
Ah, okay. So if I'm like a Korean citizen and I don't have a US address, I can still get a non-QM loan if I want to do investments in the US?
Exactly. So it's
Ooh.
not going to be your primary home. They look at it as your second home.
hmm
You're investing in the US.
So a foreigner wouldn't be able to qualify for Freddie or Fannie.
No.
Because conventional
Cool.
loans, they look for U.S. earned income that they could document
hmm
through either wages or U.S. filed taxes. But when it comes to foreigners in the non-QM sector, we're looking primarily at DSCR. It's going to be looked at, that's how we determine the eligibility because of the income producing property being able to support that debt or liability and service it.
Okay, so foreigners would be utilizing DSCR. Awesome. So shout out to Jason Waters, lending team, putting out some good content out there. Please, all the clips that I show here, I'll add in the description so you guys can go ahead and give them the likes and subscribes and whatever and support them as well. All right, we got another clip to review. This one is from First National Bank of America, and I'd like us to react to this as well.
The misconceptions about being self-employed and seeking to get a home loan and having to go to a non-QM lender such as First National are that typically you're going to try to get, that's probably tough because you're going to get a higher interest rate. I'm self-employed, I'm not traditional, I can't use my tax returns, I have to use maybe bank statements or profit and loss, which are for the most part, are unheard of out there in the industry or out there in the public. The misconception is you're going to get a higher interest rate. Interest rates are a little bit higher, but not too far off a traditional mortgage. And the other thing is it would be difficult. That's not true. In fact, we rarely use tax returns here at First National. We use the profit and loss program we have or bank statement program we have on probably more than 50% of the self-employed loans that we do. So it's a thing. It's not like it's just invented 2 months ago. It's been around for years. Just not many banks or many lenders offer the program because it's a non-traditional type thing to do.
I think this is a good point to talk about what happened in 2008 and why some people might confuse non-QM loans with subprime loans.
Yeah. Non-QM is very different from subprime because non-QM, it's actually you're still showing income. Compared to
Mm-hmm.
subprime, you're not showing income at all. And
Mm.
non-QM loans are stable loans. They're still 30-year fixes. They're not the 2-year interest only, and then your payment balloons to like double the amount after 2 years. That's subprime. Non-QM is stable loans. You're just showing income in a different format. They're considering your income in a different format, which, for a self-employed individual, who's out there that's not writing off everything and more, you know? You just cannot go and show a tax return, and the tax return shows the net income being a lot lower than because of expenses. You could take that tax return to 20 different banks, they will still give you the same answer. So that wouldn't be the route to go. However hard you try, it would not be the way to go. So with 9QM, basically like it's an alternative way of showing your income, and the banks actually are still underwriting and looking at your income. So
Yeah, awesome. And just for people to understand, writing off your taxes as a business owner or self-employed is not unethical. It
mhm.
is exactly what our government tells us to do. There is something called a tax code, and it teaches every American how you can pay less taxes, right? I think, Jason, you've read the entire tax code, right? The whole book?
You give me too much credit. I don't read, and I've never read the whole tax code, but I've always liked to research and understand it a little bit better. So, yes, I think I have a pretty good understanding because of the people that I'm working with in terms
Uh-huh.
of tax liability and mitigation and stuff like that. There's a whole different podcast we could get into if you go
Yeah,
in
yeah,
that
yeah.
direction. But yeah, the IRS tax code basically gives you the blueprint to file your taxes in a more advantaged way as a business owner. If you're W-2, you're W-2. It's black and white. You can't do anything about it.
Yeah.
Right. So that brings us to a good point. 1099 workers, contracted workers, right? You're not a business owner, but you kind of are self-employed in that sense. Um, so we're experiencing a boom in the gig economy. A lot of people are 1099 and maybe even working for multiple companies. So
Yeah.
something like a non-QM would help greatly the 1099 gig economy people, right?
Because 1099 is actually a type of non-QM loan. There's
Mm,
bank statement, there's DSCR, there's 1099. So 1099 is actually a non-QM loan type. So
awesome. So there's another clip that I'd like us to react to. All right. So here's another clip about non-QM.
You've got a slightly higher interest rate, but you've got more flexible requirements. Here's what you need to know about non-QM lenders. You don't go directly to them. You have to go through a mortgage broker.
mhm.
Wholesale lenders, they work through mortgage brokers rather than having a bunch of staff in-house to handle loan origination. But here's the problem. Mortgage brokers have a high level of flexibility on what they work on and who they work with. And a lot of mortgage brokers that have any talent, that are skilled, they discover that they can make just as much money on non-QM loans as they can on conventional. And conventional's easier, much easier for them. So one of the main problems investors run into with non-QM loans is finding mortgage brokers who are willing to work with them. And they have experience with non-QM lenders because non.
All right. I think that's enough. This video was posted 4
Uh,
years ago. What was 4 years ago? 2020, 2021, right at the tip of the pandemic. Do you guys feel like this is indicative of the time when it was posted, or do you feel like uh, it's still true that non-QMs are more difficult, it's less popular, or it's um, there's less lenders doing it, and is it actually easier than a conventional?
No, everything he says is right. It's not even just the market. Like, Nikki, go first if you want.
Well, conventional can have like it's very difficult factors because you're trying to fit everything into one little box. Non-QM, like if you have done enough non-QM loans, non-QM loans are very fun to do, and I look at it as like there's a big underserved market that
Mm.
truly needs non-QM loans. So yeah, it's I would do them all because the customers are actually more committed as well because they don't have the flexibility of going to like every bank in town. So I like non-QM loans.
So I mean, for me, when I look at that guy that was talking about non-QM like back in 2020, yes, in that period, it doesn't make sense to do non-QM because that was when the rates were like 2.5%. Like, even if
Yeah.
you're
Good point.
not qualified, it was very hard not to qualify because the rates were so low that even like
Mm.
back then, self-employed people were getting loans that they would normally not have gotten ever because the
Yeah.
rates brought everything down. So
Mm-hmm.
when I talk to the non-QM lenders now, they're going through the boom that they missed in 2020 to 2022 because the rates are so high now that the only choice is that they start doing these more forgiving income calculation loans with DSCR and things of that nature. So yes, no, and maybe is my answer on it. But
I have to say, truthfully, like back in 2020, 2021, I would go toward conventional loans. I wouldn't want to do non-QM because of the fact that conventional was getting like no appraisal, right?
Mm.
You don't even have to show income. You just do a verbal verification and there you go. It's a rate and term, just reducing the rate. So it's really counts on what time period that they're talking about. Now Fannie would never just like tell you, oh, just do a verbal verification, or you don't have appraisal. It's a different type of qualifying right now that non-QM, if you do enough of it, like I said earlier, right now we do them all. Just basically like full doc can be as hard as non-QM. Non-QM can be as hard as full docs.
Jason, is there a way that people listening to this can, if they want to do a non-QM, they can reach out to us? Do they still click the link in the description?
absolutely, you want us to be your non-QM experts because it doesn't matter what the market is. It's about the relationships and experience the broker you work with has. That's going to be a differentiator. And I can tell you right now, the 2 loans I'm closing this week were from customers that tried to go with other non-QM lenders that didn't have the experience and couldn't close. And we're closing them now. I actually just funded one yesterday in Miami on a high-rise condo, and he had an appraisal done, did everything else with the other lender, and they had no idea what they're doing. But we ended up closing that in a matter of a couple of weeks. So yeah, I can pick up the pieces. So can Nikki.
Okay, let's look at the last clip. This is another podcast. I think they're called the Loan Officer Podcast. Shout out to the Loan Officer Podcast. This was a little dated 3 years ago, but like I said, I just searched non-QM on YouTube and looked for the best and highest view counts. So this is TLOP.
What they'll look at is how much are we lending you and how much is the home going to rent for? And if the rent covers the payment, we'll do a loan for you. And this is, by the way, I'm simplifying this for everybody, right? So these are all called non-QM loans. And I'm sure there are other examples that I'm missing out on, right? These are unique outside of the box loans. What I want anyone who's tuned in to do is listen to the next 5 to 7 minutes. The next 5 to 7 minutes is what you really need to know about a non-QM loan. Whether you're an originator, whether you're a realtor, and whether you are a consumer who is going to try to take advantage of one of these loan products to qualify.
Sounds good.
Okay. Let's start with the most simple. You're not qualified.
Okay.
You are not qualified.
Okay.
but we're going to try to obtain financing for you. So you don't meet this standard that was set forth by our regulators. It's not a hard no. It's a no for that, but there's hope. But please know it's a hard-ass loan to do. And not many originators do enough of them consistently to be experts at them.
No.
Yeah, it's a hard ass loan to do, and not many do it enough to become experts. What's your take on this? Is this consistent with your experiences, Jason, or do you disagree?
I actually agree with half of what he says because it is a hard ass loan to do. It's not a common loan that loan officers would really run into with, like, say, for example, working with the normal bank or a direct lender, because their main product lines are just conventional loans with Fannie or Freddie, FHA, or VA loans. But when it comes to non-QM, you're basically helping the non-qualified folks, right, through traditional finance. So it is definitely a hard ass loan, and you need to really work with someone that has the experience to do this type of program.
Offline, we were talking about this in preparation for the show. Non-QM loans, there's so many different programs and products for non-QM. It's not just the examples that we show today, DSCR or bank statement, and the few that you mentioned. There's like hundreds of products out there.
There's hundreds, if not maybe 1,000 different lenders out there, because banks and different wholesale lenders offer these types of programs. And just because it falls into the group of non-QM, it doesn't mean they underwrite or have guidelines built the same way. So lenders A to Z can choose different ways to qualify you for the same income that you look at through bank statement deposits through your business, or your cash flow through that rental property or portfolio of properties. So it can vary quite a bit.
Yeah, and a little bit of a plug for us again to our viewers, maybe who are investors who have not tried QM loans, and you don't have a mortgage guy that you can go to. Maybe you're overseas, foreign national, and you want to invest into the United States, start a business maybe, or purchase a home. Non-QM loan originators are hard to come by. Experts are hard to come by. However, we do have two in-house expert non-QM originators, Jason and Nikki. As we mentioned in the previous episode of the podcast, Nikki has done hundreds of non-QM loans, so she's definitely qualified as an expert, and Jason as well, right?
Yeah, absolutely. So it's actually very important that you work and vet out who you're working with as a mortgage broker, because, for example, you're not going to go to a pediatrician to get your other special needs taken care of, right? So it's like if you want to go to a specialist for what you're looking for. So if you are looking for investor loan, or you're trying to figure out why this lender couldn't help you before traditionally, or you own your own business, or you're looking to invest in the US with our real estate, you have to work with the specialist. And that's where Nikki and I would come in to fit that need for you and get that second opinion, because it's going to be very important they understand how to navigate through it, because there are little nuances that make a loan very easy to complete and very difficult to complete.
Yeah. So what would you say is like a worst case scenario? Would it be just, hey, I'm a consumer, I went to the wrong MLO and I wasted my time and I missed out on this opportunity? Is that the worst case scenario? Or is the worst case scenario even worse, where I do get the loan and they did it wrong, and now I'm on the hook for something and I didn't really understand?
Yeah, so I mean, it's more so the circumstance, right? On a purchase side, it's more critical because now you have earnest money deposit on the line. So if you don't deliver on your end and close on time, the seller could just take that deposit and you just lose that completely. With the refinance, you're somewhat okay because you still own the property, but now at this point, you might be out appraisals. You might have run your credit a few times, or it wasted money and time, right, and opportunity. Because most of the people that do refinance on these types of non-QM loans, it's to build their business and their portfolio. So the cash that they get from me or Nikki in these cases are to acquire other properties. so they can continue to build that business. So it's very important that the broker and you and your business model as a real estate investor, it meshes. That way you have this synergy, this relationship, so you guys understand how you like to move and plan and build accordingly.
Right. And for us who've been in the business world, opportunity cost is something that you don't see on the books, but it's felt. And you can't, it is a cost. It's you miss out on that one opportunity that could have cash flowed you for the next 10 years if you're doing real estate, maybe 20 years. Yeah, and
or it could have been like what we were talking about last week, right? When we were looking at cash flowing on a commercial property and finding out where you had the opportunity for extra equity, right? You might have had to buy a home or property where you could have rehabbed it, and you would have had a 50% equity upside on it, and that's a loss.
Yeah, and that was like the one thing in your area. It was like a unicorn property, and someone else sweeped it up because you screwed up, your MLO screwed up on the application process.
Exactly. That's the difference of getting to your magic number in your portfolio or not. It's that relationship with the people you work with moving forward.
Yeah. Cool. There's a million things to learn and to know, and it all really depends on your specific project and your specific needs. So if you want to learn more, please give us a call. Click the link in the description below, DM us, give us a comment, reach out to us, and we will definitely help you navigate through whatever investment strategies that you're considering in the real estate or mortgage space. All right, everyone, that was it for our episode of Non-QM. Thanks for listening and tuning in. Please support us by liking, subscribing, sharing, and do all the YouTube and social media stuff.
Yes,
Help us out
please.
here. We're just starting out. And we hope that we were able to bring some value to those people looking for non-QM or just curious of what a non-QM is. And we'll catch you next time. Bye.
Bye.